Thanks a lot, Chrissy, and well done. You do a great job. Right, shut the doors. As Chrissy's just said, I'm going to make you some money. Fenix, unusually, is a highly profitable iron ore miner in WA's Midwest. It's great to be here in Sydney. Last time I spoke at one of these conferences was in Busselton, another hiving metropolis and centre of world activity and finance. But it's fantastic to be here in Sydney. I first came across here as a very young Western Australian rugby player and played down at East and ended up playing many years for the Waratahs and occasionally when they picked me for the Wallabies in an era where, as I point out to people, we used to win. So it's great to be back here in Sydney representing the WA iron ore industry on a day when almost single-handedly as a Western Australian iron ore miner we've dragged the Australian economy into surplus. Fenix is a small-scale miner and we do pay a fully franked dividend, which I think is what Chrissy is referring to, and I'll talk a little bit about that story. We're not a lithium producer or a lithium hopeful, we're not in the gold market, but in amongst those hilarious jokes about rugby and WA iron ore mining, no one should be, it shouldn't be lost on people that the richest people in this country are iron ore miners, and I'm sure there's a space for all of us to get into it, and I'd encourage you to be a shareholder of Fenix. I've got a little video here. This presentation is available on our ASX platform, and I'll talk through this video because let's go and have a look at our operations. There's a fantastic ore body. Look at it straight down the centre there. This is the Iron Ridge mine. It's in the Midwest of Western Australia. We mine and haul to Geraldton, which is 400 kilometres north of Perth. Very simple drill and blast operation and truck. It's effectively a quarry. We're currently mining at 1.3 million tonnes a year. Simple crushing and screening plant produces a 64% clean lump product, there you can see it, and a 63% fines. That's the weighbridge at Iron Ridge loading into our fully owned haulage fleet, 200-tonne trucks. There's our only side tipping loadout in Geraldton Port that we own, and that loads into a fully Fenix-owned shed at Geraldton Port. We have an Indigenous operated business that looks after our port handling, and that allows us to load Panamax boats. We have 100% offtake with two offtake partners, Sino Steel and Atlas, and so our iron ore then travels to China and also to global customers a lot in Southeast Asia on shorter shipping routes. So it's a unique business, even though we're a small-scale iron ore mine. We own and operate our mine, we own and operate our haulage logistics train, and we own and operate our own port facilities. So in summary, I mentioned we've got a fantastic product, a unique ore body of microplate hematite, low impurities, and outperforming our expectations in terms of its ability to deliver lump. The original feasibility study for Fenix was to produce 1.3 million tonnes per annum, and that's exactly what we're doing, almost exactly as anticipated. A very rare example of a exploration, development and feasibility study that's gone exactly to plan. Last year we acquired the other 50% of the haulage joint venture we set up as part of that development plan, and so we now own 30 truck and trailer combinations that haul all of our ore. And we've been able to generate strong cash flows and pay dividends to shareholders, as mentioned. A little bit about that pathway. Fenix raised $15 million from shareholders in 2019 and 2020. We started the mine in late 2020. First production was put into the boat in February of 2021, and we recently departed our 50th cargo from Geraldton. And at the end of June of this year, if we're on track, we'll produce our 3 millionth tonne of iron ore. And I'm very proud to say that having raised $15 million from the market, we've paid back $53.5 million in fully franked dividends. We've got more than $70 million in the bank, and we're making money every day, particularly at current strong iron ore prices. There's the Midwest, Geraldton. 500 kilometres of haul road between Iron Ridge and the port of Geraldton. And you know, I know there's a lot of young investors that have come to this conference, but the older investors, if there are a few here, will remember many companies that have explored and successfully discovered iron ore in WA's Midwest. Almost exclusively the big iron ore producers are out of Port Hedland in the Pilbara and in the north of Western Australia. For 30 years, a range of hopefuls have spoken about the potential of the Midwest to expand and be a significant iron ore producer. Mount Gibson were doing 6 million tonnes out of the existing port of Geraldton for a period of time from Tullaran Peak and Extension Hill. Companies like Murchison Metals, Jindalby, Flinders Mines, the Midwest Iron Ore Alliance, the Geraldton Iron Ore Alliance, all were promoting the opportunity to do 10, 20, 30, 40, 50 million tonnes a year from this region. That potential still exists. We are really excited at Fenix about the integrated logistics platform that we've developed. We are mining a very efficient ore body, but quite a small ore body at Iron Ridge. Our latest resource statement was 8.3 million tonnes at just under 65% iron ore. So we've got 5 years of mine life in front of us at the current run rate of 1.3. But we're obviously interested in growth. We're interested in finding, discovering and acquiring more iron ore in this prolific Midwest region to extend our mine life and to exploit the other obvious opportunity of increasing our production rate. But first of all, let's look at and describe a little bit about our existing operation. There's a nice picture of Iron Ridge. It's a really clean and nice mine. One digger, 4 trucks, run by Chris Tuckwell. He's the former managing director of Macca Mining, and Macca Mining are a mining contractor on site, and they're doing a great job since inception. There's our 2 product stockpiles from our very simple crushing and screening plant, also operated by Macca. And you can see in the foreground there is our 64% lump product, and the other cone is our 63% fines product. We were originally expecting around 40% lump, and we're actually outperforming that, and very strong blend with very few impurities, and we get a slight premium above the 62% index price, which is pleasing. Very well controlled mine, very simple operation. We mine, crush and screen, and then directly load our haul trucks. As you can see, our haul truck's a specially designed trailer combination. It's a quad, 65 metres long. We've had that constructed in Western Australia and licensed on the relevant roads, and it's a state-of-the-art business that is a huge cost advantage to Fenix. 93% of that 500 kilometre haul road, the drivers are on full cruise control. We have retinal scans on our drivers. Every single truck is the same, and we're getting best performance in terms of kilometres and fuel efficiency across the industry. We're setting new standards and leading the industry in bulk haulage. Another significant advantage of Fenix is we own and are the only side tipping loadout station at Geraldton Port. It's a Fenix asset. You can see one of our quads being unloaded there, and that conveyor leads directly to a Fenix-owned shed where we store our iron ore and stockpile for our regular Panamex shipments. And here's a Panamex boat being loaded at the port of Geraldton. Let's talk about growth and what's next for Fenix. The Iron Ridge mine does have extension capabilities. Fenix has acquired 100% of the iron ore rights of the Pharos project that surrounds us. There's a number of opportunities we're exploring there. And I mentioned also the many other iron ore deposits that are currently stranded, not being mined, that exist within the Midwest. If you draw a 600 kilometre circle around Geraldton, you capture billions of tonnes of iron ore that has been explored and defined, and a lot of that is available for extraction. And we have an infrastructure corridor that is movable and relocatable, and we're actively continuing those discussions and very ambitiously pursuing a growth concept. Our ability to fund growth is obviously supported by a very strong operation and balance sheet currently. And that is supported and has been proven to be a strength of Fenix is our hedging policy. We put in place swap contracts for just under half of our production. So we currently have 50,000 tonnes a month hedged at 175 Australian dollars to June, and then from July to December we have 40,000 tonnes a month hedged at a similar price. And that smooths out what has been a very volatile journey in iron ore. Recently the iron ore price was $120 a week ago. It was 103. Today it's 110. But effectively we've got a strong margin locked in on that hedging component, and that is one of the many things that's allowed us to fund and pay a strong dividend to our shareholders. We also have a strong focus on technology. We recently launched a driver training simulator, which is the first of its kind in the world. It's something that's more commonly deployed in the airline industry. That is $1 million investment in a driver training module that effectively completely replicates the 500 kilometre haul road from Iron Ridge to Geraldton and back, and it allows us to take young Indigenous and other trainees and put them behind the wheel of what is otherwise a 200-tonne, 100-kilometre-an-hour bullet in a safe environment, in the same way that the airline industry does, and take them on a journey to be a future Fenix employee. And that's part of a commitment that we have to the traditional owners of the land on which we operate and mine, the Wurundjeri Yamaji people. We have an agreement with them that is fundamental to the formation of our company, and I'm proud that we have one of the highest Indigenous employment rates in the Australian mining industry, and something that we continue to work on is our partnership with the traditional owners, and that includes not only direct employment but also sponsoring the creation of Indigenous-owned businesses. So I mentioned when we did the quick video scan that our port loading is actually a joint venture business that we set up with an Indigenous group, and that's an example of our sponsorship and support, not only for direct employment but also for the creation of ongoing sustainable business for the traditional owners. We're very keen on our position in the Midwest. We're one of the largest employers, having created 200 jobs in and around Geraldton, and we're looking to create more with greater growth. What that looks like, Geraldton Port has done up to 10 million tonnes a year. The state government in their last budget announced a $350 million investment in the existing port. Often the iron ore potential of the Midwest has been linked with the potential creation of a new bulk mineral port just north of Geraldton at a place called Oakajee. Fenix, we have an existing position at the existing port. It's being expanded. We think that that there is available capacity there for Fenix to do up to 5 million tonnes and possibly 10 million tonnes. We have to find that material, but we have the capacity both in terms of our existing port operations and our existing haulage operations to quickly and easily expand those. Based on the success of our mining operations at Iron Ridge, we're looking around for more material, both at Iron Ridge, nearby within the World Range, and in that larger circle of the Midwest, capitalising on the potential that's been there for many years. I've got a minute till Chrissy stands up and then possibly boots me off the stage. So let me summarise here on Fenix. One of the things that will jump out to the investors in the room is that dividend yield of 20%. I mentioned the cash flow generation we've had in the 2 years we've been operating. Both of those years we've paid a 5.25 cent fully franked dividend. We're on track for another very profitable year. Our dividend policy currently says that we will pay 50 to 80% of our net profit after tax to shareholders as a fully franked dividend. We believe it's possible to continue to pay a generous dividend while we fund growth, and that's consistent with our model. We're looking for low capital, very high return businesses. We believe there's an opportunity to build a large-scale sustainable business in the current iron ore price environment. We think that there's an opportunity for growth that will not only drive greater revenues but also allow us to bring our costs down. One thing not mentioned in this presentation, and people may be interested, is our cost structures. The last 2 quarters we've averaged a FOB cost of around 80 Australian dollars, just under 60 US. That's a fantastic job when you're producing 1.3 million tonnes per annum of iron ore. It's a business that rewards scale, And we think there's a journey for Fenix to be a much lower cost, higher volume producer of iron ore. The best way to bring your cost down in bulk commodities is change the denominator, spread your fixed costs over more tonnes, and that's a key part of our journey. We've got a very small team. I'm joined here at the conference with Stuart Osmeyer, who's our Chief Financial Officer. We're at booth 74. We've got lots of pictures to show you, and very interested. Come and have a talk about Fenix, profitable iron ore producer and ready for growth. Thanks, Chrissy.